Good evening, everyone. This is Ashwath, and you're watching Bhav and Beyond. This is the first episode of the series, and this is me doing it. I'm talking to a microphone after a very long time, so please treat me with some sort of kindness. I know internet isn't kind these days, and again, this is a entirely unscripted market analysis series where I talk about the market. This does not mean I don't have anything to talk about. I have right in front of me, I have like 7 pages worth of notes that I've made to talk about in this video, and I think I'll need to make a lot of more videos to cover all of it up. But again, this is first of its kind for me, and so let's talk about Bhav and Beyond first of all before we start into the market analysis. So this Bhav and Beyond is, for me, it's my, I think, blog. I didn't want to write all of it for LinkedIn for nobody to read it, because let's face it, not a lot of people that use LinkedIn or that use LinkedIn for its core competence features are gonna stick to it and read pages and pages, because I know I have 6 pages of my handwritten notes that are in itself very, very vague, and I'm gonna talk about it. I'm gonna go in deep in some topics. I'm gonna leave some for the next few videos in the series. Let's face it, that will be pages and pages worth of absolute filled up documents, and nobody's gonna read it. So I'm gonna try to make this understandable. I'm gonna try to make this fairly easy for somebody who's into this space. I'm gonna try to break it down for somebody who is in the markets, who is wishing themselves that they know some sort of magic in this market. Well, again, I do not promise that I'm gonna deliver the best of the research. I'll try my best to provide you with everything that I see, everything that I feel like. And again, first of all, before starting all of this, again, this is a highly unscripted video, so I have no idea what's the sequence of things that I should be talking about. But first of all, this is a disclaimer. I'm not a SEBI registered analyst, and this is entirely for informational purposes. I do not claim or advise anyone to make investment based on these advices, based on these research. Please consult your financial advisor before making any investment decisions. And if you do make any investment decisions, I do not have any responsibility for the same. Again, you have to do it for the sake of the government. You have to do it for the sake of SEBI. Again, this is a very unscripted video, so I'm gonna try to make it kind of interactive. Let's face it. Let's face it first of all. You're an investor, and if you've started to invest after 2022 like I, तुम्हें थोड़ा सा प्रॉब्लम हो रहा होगा अभी. Like the Nifty. Today we're focusing on Nifty entirely. We'll be talking about a lot of things. We'll be talking about gold. We'll be talking about S&P 500. Actually, in my research, in the upcoming videos, which I have no commitment towards, that I'll be uploading every Sunday, every that day. I'll be only uploading when I'll see there is a certain thing that is kind of absurd in the market, certain confusion in the market. That is when I'll be uploading. I'll try to make this series very raw, without much of editing. I'll make it easier for me to upload as well, and let's just see. So again, I was talking about S&P 500. जो ये video series आएगी, again I'll be talking in English and Hindi both, but I'll try to focus on English more. So whatever this video series that will follow after this one video, we'll try to focus a lot on Indian markets, but at the same time we'll be focusing on S&P 500, because again, let's face it, when US sneezes, the entire world catches cold. So S&P 500 is not that one index that we can just leave outside and focus entirely on our markets. That would be a wrong approach. So we'll be talking about Nifty today, but again, we'll be talking about a lot of things. We'll be talking about gold, we'll be talking about S&P 500, we'll be talking about US inflation, official inflation, we'll be talking about US dollar index, we'll be talking about VIX in general. So let's start off. First of all, let's just say I am not a very technical analysis person. You guys see this candles, EMAs, lines. I understand all of this. It's just that I do not prefer to be that one nerd who is like, oh, the markets are gonna bounce from here, the markets are gonna do this, markets are gonna do that. And I don't think I'll be the one to make guidelines. Oh, the market is making this, now this will do this. I am not a very technical analyst savvy person. I know how to apply technical analysis towards market, but I don't think that's the only approach that is profitable, the only way to make money out of this market. I'll be using technical analysis mixed match with a lot of different economic factors that are going on around to see what is happening in the market, what is most likely to happen in the market. So let's see, according to my notes, first of all, we'll talk about Nifty. Okay, Nifty is down about 10%, 10.6% from the very peak. The euphoria was real. I was up. I was making a bang when the markets were trading about 26,300. I was making a bang on my portfolio. Then the market fell 10% down. There's a lot of panic I see. There's a lot of content creators that I see on LinkedIn, on Twitter, that are claiming that the markets are going to go to 22,000, 21,000. Some are claiming it will come back to 18,000. Let's just see. Let's just try to break it one by one. I have a lot of data in front of me and I'll talk about few of them. First of all, what is this red line? That in itself is what's that? Sorry, that's a 200 period EMA. What is EMA? Exponential moving average. That's a dynamic support and resistance for any ticker, for any stock price. Let's just see. So what did I say? The EMA are dynamic support and resistance for any price. You see, we are looking at Nifty. Nifty has taken a support from the last 1.5 years from this very line. It has taken support on October 26th from this line. It was falling down. It fell down about 6-7% from the very peaks of then the all-time high, and then it corrected back up again. Then we see the same, I think on 4th of June, the election day, I remember. The markets, the Nifty exactly, it bounced exactly from 200 period exponential moving average, and as of now, we are standing right at it. The Nifty is right at 200 period exponential moving average. These are technical terms. It's not like I'm gonna say कि यहाँ से अब निफ्टी को ऊपर जाएगा क्योंकि निफ्टी पिछले 1.5 साल से हर बार जब भी वहाँ पे आया है it went up. No, there are periods जब वो नहीं भी आया, जब उसने falls out दिया, जब वो उसके नीचे trade किया. I remember 2021. See, it traded. Wait. Sorry, 2022. My bad, guys. 2022. It traded for a very good period below 200 moving average. There are a lot of periods. See, 2018 it traded below the moving average. It broke past it. So I'm not gonna say कि यार यहाँ पे कुछ अलग होने वाला है. यहाँ पे आया and यहाँ से ऊपर चला जाएगा. यहाँ पे क्योंकि यहाँ पे भी पिछले 1.5 साल से वो ऐसा कर रहा है. But I have fair reasons. यहाँ पे चीज़ें थोड़ी कॉम्प्लिकेट होंगी, but I have fair reasons to believe कि यहाँ पे एटलीस्ट ऊपर नहीं भी जाएगा तो there will be a retracement. There might not be a retracement. I'll give you the reasons behind it as well. So let's understand what's on my chart exactly. This is Nifty. The red line is resistance, जहाँ से उसको ऊपर जाने में थोड़ी सी प्रॉब्लम हो सकती है. The white lines are support. These support are entirely based on demand and supply. These are not based on what's in the OI. the open interest. We'll talk about what's there in the OI in the future as in this video only. So market is at 200 period exponential moving average exactly. Now I said this like 5 times already. I am not that one person who relies entirely on technicals, but this in itself, this candlestick pattern in itself is a very, I won't say neutral, but according to my trading strategy that I have used over the past years, this is something that I look for before making a reversal entry. This is something that I would enter happily, I would buy into happily. But as of now, myself, I'm down, I have cash in my account, but I'm not buying, I'm not convinced yet. I'll tell you the reasons behind it. See, first of all, the red line, the 23 or 24,000, let's round it off. I have marked it as one of the resistance that the market will face going upwards. There are certain supports that are based on technical terms, but again, I'll apply one more indicator. I'll apply 2 more indicators. I'm not an indicator person, but I'll apply 2 more indicators on this, and let's try to understand it even further. One indicator is RSI, and the other indicator will be EMA only. Oh, my bad. Will be EMA only, but that EMA period will be 20 period exponential moving average. Yes, I'll tell you guys one thing that I've noticed over this very long period of time that I've been in the market. See, 200 period moving average, the red line in this dynamic red line, it has always been the long-term support or resistance towards any stock, any ticker that we see. You guys can check it. At the same time, this 20 period EMA, oh my bad, ये हर एक स्टॉक के लिए एक मैग्नेट होता है. कभी देखना, कभी भी स्टॉक उस लाइन से दूर गया ना, वो हमेशा वापस आया, या तो ये लाइन उसके पास गई है. तो मैं देखना है, मैं तुम्हें दिखाता हूँ. देखो, निफ्टी वॉज फॉलिंग, it was falling away from this blue line, it came back up. Nifty was going way up, it came back down. Nifty was falling, it came back up. Nifty was falling like crazy, it retraced back. अगर तुम्हें इसका सबसे अच्छा वो देखना तो कोविड, look at this. Markets are crashing, the price is going way far away from this one particular exponential moving average, the 20 period exponential moving average. I'll tell you three things that I've noticed in the past. जब भी स्टॉक, जब भी कोई टिकर एक्सपोनेंशियल मूविंग एवरेज से दूर जाता है तो 3 चीज़ें होती हैं. या तो वो स्टॉक, वो टिकर एक्सपोनेंशियल मूविंग एवरेज के पास आता है, या तो एक्सपोनेंशियल मूविंग एवरेज उसके पास आता है, या तो दोनों का एक सर्टेन कॉमन ग्राउंड आता है जहाँ पे वो एक्सपोनेंशियल मूविंग एवरेज भी थोड़ा नीचे आएगा या ऊपर जाएगा, और स्टॉक भी थोड़ा कंसोलिडेट करेगा, थोड़ा ऊपर या नीचे जाएगा अकॉर्डिंग टू द सिचुएशन. अब अगर वही सेम चीज़ अगर मैं अभी के मार्केट सिनेरियो में अप्लाई करूं, तुम खुद देखो. व्हाट यू गाइस सी, what I personally see is markets that fell down this much. I see markets resting, markets making, I do not say this, markets making a reversal candlestick pattern, not complete yet, but a candlestick pattern on a very, very important dynamic support, that is your 200 moving average, which at this point is far away from your 20 period moving average. And 20 period moving average on a daily time frame is at 24,230. This is 2 things that I talked about, 20 and yeah. Now let's see one more thing. Markets are making lows, right? This close is the close of 4th November is much higher than the close on 12th November. But at the same time, look at the RSI. It keeps on rising. If it does not rise, it's kind of stable. That means I don't see this as the classic case of divergence, RSI divergence. I will talk about it in the future videos, not this one, because that will make this video like extensively long. We're already 14 minutes in, and I'm not even half page through my 6-page worth of notes. So I won't say this is a classic case of divergence, RSI divergence, but this is some sort of divergence that I see. Let's just talk about technical terms. What do I see at technical levels? I see markets trying to go up entirely based on technicals, Nifty, not including any other external factors. Technical, on the basis of technicals, we see that the markets will either go up towards 24,000, matlab 500 points from here, towards 24,000, and will consolidate there before making any move. And before making any move, I think that any move for me right now, I believe, would be towards the downside. But before the downside, I think 24,000 is the immediate level that I see in the next week or two. Okay, I'm sorry for the delay back. Again, we talked about Nifty. We talked about what I see. I see Nifty coming to 24,000 the next week or two, and then making another move. Let's see Bank Nifty again. Bank Nifty is following the same feature, same exact feature. It is resting at its 200 period moving average. It is at trend line, which is at a support. I haven't marked the resistance. I haven't marked the supply zones for Bank Nifty, but it is following the same principle that Nifty is following. So I won't be talking about it. Rather, what I would be talking about is the option data. Yes, the option data. I collected it. We're talking about Nifty monthly expiry of November. I'm not going any further. So what do I see? I see, first of all, I see the PCR. I see a PCR. PCR is the put call ratio of Nifty at 1. I won't consider that as 0.1. I don't think that is that makes any sense. I'll consider PCR of Nifty to be 1. What does 1 mean? See, if you study behavioral economics, people tend to buy a lot more calls. What does put call ratio mean? It means the amount of puts compared to amount of calls, the ratio between them. Put means the amount of bets that are being placed to bet whether the market will go down. Calls mean whether the markets will go up. Usually, in the last 4 years of me trading the financial markets, me trading exclusively Nifty and Bank Nifty, I've seen it to be somewhere near 0.7 to 1. When the markets are neutral, when the markets are not flooding with a lot of news, on a monthly level, Nifty on a monthly level, the monthly expiry of Nifty's contract, it shows that the PCR level of Nifty is 1. If it was somewhere near below 0.7, I would consider that as bullish. Now that's the fun part. अगर मैं यही 28th November से change करके December की first weekly expiry पे कर दूँ, then you will see an entirely different thing, entirely different OI buildup. And don't want to talk about it. I want to talk about this month end expiry. If you see this month end expiry के हिसाब से, I'll talk about 3 things here. Actually 4. I've talked about 1. I've talked about PCR. If you're talking about option data, I've talked about the PCR. Now I'll be talking about the max pain. I'll be talking about where the open interest is. I'll be talking about the change in OI. These are kind of difficult topics. If you're a beginner to it, you won't understand it. Maybe I'll make a video about how to understand it. This is not a very beginner friendly video. I'm sorry. I will maybe try to make that kind of videos in the future. But again, Nifty ride as of now is at 23,530. Let's see where the OI is. Nifty, we see a lot of calls being written at 24,000. That means there is going to be a certain resistance at 24,000. At the same time, we see a lot of puts being written at 23,000 and 23,500. Means a lot of option sellers who are selling puts are kind of convinced that the market won't breach 23,500 or 23,000 at least till 28th November. They do not know about the further. We see that there are resistance at 24,000. I talked about the markets are going to go somewhere near 24,000. So we have 2 things that are kind of confirming my theory of 24,000 in the next 2 weeks. But at the same time, the max pain data is saying that the max pain strike is 24,050. First of all, I need to tell you guys that whatever we talked about in this part of the video, the Opstra part of the video, the option chain part of the video, that is not as solid as what technicals say, because again, this could be manipulated in a day's work or so. Because again, this is real people that we're talking about, real position that we're talking about. It can be manipulated with the, I won't say manipulated is the right word, it could be changed with the help of chart. If certain pattern emerges on the chart, it will drastically change like rapidly. So this is not the best indicator of anything. But again, the max pain data is 24,050. What does that number mean? That means if the market somehow closes on 28th November 3:30 p.m. near 24,050, that will cause the maximum amount of pain for every option writer, option buyer, be it put buyer, be it a call buyer. And usually what happens is markets, 7 out of 10 times I've seen, markets tend to expire near their max pain. Our derivative contracts tends to expire near the max pain strike. And as of now, this is 24,050. Again, we have 2 weeks. This number could be changed. This number could change with any given movement. Again, a lot of put buyers can come and push this number kind of up. So this number can be a thing. So we talked about all this. We talked about the PCR being 1 means it's neutral. It's not bullish. It's not bearish either. We talked about there are kind of congestions on the open interest on 24,000 levels. But again, there are support at 23,500 and 23,000 levels. But again, you might wonder one thing that I've been wondering and I have no answers to it. Honestly, I do not have any answers to it. That is, if all of this is happening to the market, why is the VIX, the India VIX not picking up? If you are somebody seasoned in the market, they have seen market picking up VIX on a random strung of events. Like, okay, I get it. War is one very big event where VIX tends to pick up. But the markets, what is VIX first of all? VIX is volatility index that shows how much fear is there in the market. When the markets have already corrected more than 10.5%, already 1.2 lakh crores have been withdrawn from the market in the last 1.5 months by FII in cash. Why is the VIX so quiet? I genuinely have no idea why is the VIX so quiet. And if you do look at the numbers, if you do look at the reports, we're talking about Thursday, when the market was open. Only one stock, and I do want you guys to listen to it like with all your attention. Only one stock out of 50. Again, this is kind of a not so beginner friendly video, but again, I'll introduce some videos. I'll tell you guys some videos that you can watch to understand all of this completely. But again, only one stock out of the 50 stocks witnessed long build up. What does long build up means? Means somebody is building their long positions, and means somebody is bullish on that stock. And out of one stock out of 50, and again 2 stocks out of the remaining 49 stocks witnessed their short coverings. Means whoever was short on the stock, they started to cover their shorts. That leaves us with the remaining 47 stocks, right? Rest 30 stocks out of the 47 stocks, they witnessed a short build-up. Means somebody was building short positions in the stock, and the remaining 17% were long unwinding. Means somebody was long on those stocks, and they were covering, they were closing their positions. So if we look at the bullish side of it, that only means 3 out of the 50 stocks were somehow, according to the data, according to the option data, were bullish. Only 3 stocks out of the 50 stocks, they were bullish. Now you may ask कि शाश्वत, तू अभी बोल रहा है यहाँ से 500 पॉइंट ऊपर की रैली आनी चाहिए टेक्निकल्स के हिसाब से, ऑप्शन डेटा के हिसाब से. बट अगेन निफ्टी जो है, निफ्टी इज मेड अप ऑफ 50 डिफरेंट स्टॉक्स. उन 50 डिफरेंट स्टॉक्स में सिर्फ 3 स्टॉक्स ही बुलिश है. वेरी ट्रू, दैट इज द पॉइंट, दैट इज द कंफ्यूजन. अब I was looking at the numbers. FIIs, they have increased their net shorts by buying index put Nifty 50 में by I think 3,000 crores if I'm not wrong, just on Thursday. And this has been going on for a very long period. This is not cash. This is not cash. This is index stocks, not cash stocks. Again, I will show you. Yes, look at this. If I go monthly and I go FNO, FII cash, look at this number. 91,000 just October. That is more than $1 billion. More than $10 billion. November, 22,000 crores. That is about $3 billion. These numbers are not adding up. This is my point. And I can go into a lot. But ये तो अभी तक हम बहुत सारा इंडियन मार्केट पे वो थे, बहुत सारे इंडियन मार्केट पे ही हम अभी तक टिके हुए थे. हम इंडियन मार्केट के बाहर नहीं देख रहे थे. बट वाई इज इंडियन मार्केट फॉलिंग? अगर हम ऊपर से देखें, क्यों? क्योंकि इंडियन FIIs पैसे निकाल के अपने मार्केट्स में लगा रहे हैं. वो चाइना में जा रहे हैं क्योंकि चाइना में उनको ज़्यादा अच्छा वैल्यू मिल रहा है. तो वी हैव टू लुक एट द ब्रॉडर पिक्चर. यही इसीलिए मैं स्टार्टिंग में कह रहा था वीडियो कि आई डू नॉट entirely rely on the technical side of any chart whatsoever. I used to believe in it. Now I think I am way above I have gained some sort of spirituality to understand this is not it. So we have to talk big picture. I did talk about yield curve inversion on my LinkedIn. I really wish तुम लोगों ने पढ़ा हो. मैं yield curve पे अगर बात करना शुरू करूँगा तो that will take an entire video of its own. I'm not gonna talk about yield curves. So let's just talk about. I was looking at gold. ठीक है, मैं तुम्हें कुछ बताता हूँ. We all know 2008 में क्या हुआ था. That was the greatest financial disaster of the century. That was again followed by the Great Depression. Great Depression. Then this. I was looking at gold. ठीक है. So let's just rewind back first of all. This is whatever the gray area is, that is official US recession periods. I have not mentioned India because again US ज़्यादा matter कर रहा है at this point, क्योंकि US if US is facing any sort of troubles, then India will face those sort of troubles, because again if US catches cold, the entire world catches cold. Let's just rewind back a little. अगर तुम देखोगे जब ये official gray periods and recession periods, and this is the price of gold in dollar forms. When the recession began, exactly 1 year before the recession began, gold almost gained 50% in just a year. That was followed by a recession. Again, if I come in this is 1972, the recession of 1972. I'll talk about what happened after it. This is 2008. So official data of 2008 is the recession started in January of 2008. So if you actually include January of 2008 and compare the price from January of 2007, that is about 50%. That is about January. Again, that is about 50% returns in 1 year. तो तुम ये देखो, जब भी whenever there is some sort of financial difficulty in an economy, I showed you two different recessions. One was 1973-74, 74-75. The other one was the great financial crisis of 2008. Whenever there is a financial crisis, or there will be a financial crisis, people are overseeing that crisis. Gold tends to go up. Gold tends to give return like 50% in a year, which is very absurd number for gold. Look at what is happening right now. This is the right now period. in the last 1 year, from October 30th, I'll count, to the high of October 7th, gold was giving 40% return, and it just came down this week. I do not have any idea what it will do the next week or so. So whenever there is some sort of financial difficulty, people are foreseeing any future difficulties, gold tends to give enormous returns. अब इसका रीज़न समझने की कोशिश करता, मैंने बताया गोल्ड तभी ऊपर जाता है जब लोगों को लगता है कि नो, अब इकोनॉमी डिफ़िकल्ट होगी, इकोनॉमी का ग्रोथ स्लो डाउन होगा, इकोनॉमी में पैसा बनाना स्लो डाउन हो जाएगा, तब गोल्ड ऊपर जाता है. क्योंकि गोल्ड इज़ दैट वन प्रेशियस मेटल जो सब हमेशा से बचपन से सुना है कि यार कुछ भी हो गोल्ड ले लो, गोल्ड हमेशा ऊपर जाएगा, गोल्ड और ज़मीन हमेशा ऊपर जाएगी, हमेशा सुना है. अनफॉर्चुनेटली यू कैन नॉट ट्रेड लैंड ऑन हियर इन द स्टॉक मार्केट, बट यू कैन ट्रेड गोल्ड. गोल्ड का ऊपर जाने का रीज़न एक और है, दैट इज यूएस डॉलर का वैल्यू नीचे जाना. अब अगेन दिस वुड नॉट मेक सेंस टू यू अगर तुम गलती से यूएस का ये देखोगे तो. लुक एट दिस, दिस इज द strengthening of US dollar. See, I'll show you. If you look at the daily picture, gold started going down. Only when the dollar was picking back up. The dollar index was going up. So मैंने बताया ना, जैसे investors buy gold when they think the US dollar will lose its value. They invest in gold because they don't think the US stock market or the US, anything that has a US dollar will hold on their value, because again dollar is in itself losing its value. That is a different genre, different topic. I think this video is already 32 minutes long and I don't want to stretch it by again. I'm not even halfway through whatever I decided to talk about on here. I have a lot of videos, I have a lot of figures, I have a lot of facts that I do want to talk about. God, can I all fit that in one video? We'll talk about it in the next coming videos, but again, I want to give all of my insights to you in the most compact form of content that I could. And 30 minutes, I think it's compact, considering the value, considering the insights that I have researched about, and I'm giving it to you. Again, I have this one more very interesting thing. I'll show you. Yes, this is the chart of inflation adjusted S&P 500, Standard & Poor's 500. And this line in itself, this chart, it's adjusted for inflation, considering whatever the inflation rate was. And this line, the linear line that you see, is the mean of all of this. Do you see whenever the years are marked here, do you see whenever the stock market was trading way far away from its mean, there has been some sort of market crashes? I'll show you. Before I don't even think that we should go that back. The Great Depression, the stock market was one of the most expensive. I think, who was the president of then? I have no idea who was the US president of that time. But again, the stock market was the most expensive. It was trading at very high premium. It crashed 80%. 73. It crashed 60%. The dot-com bubble, it was trading way above its mean. Crash. Look at where we are right now. So I think the market, this is a very contrasting view. I think that we talked about Nifty coming up, but then again I talked about it will come back to 24,000 and maybe it will go down more further. I see some sort of retracement back and then going back down again. But I just talked about so much on why I think the markets are going to collapse. in the future. And I haven't talked a lot. I have a lot of tabs open that I wanted to talk about. I wanted to talk about yield curve. I wanted to talk about inflation. What if inflation picks up? You know what? Let's just talk about what if inflation picks back up. See, yes. The higher the inflation, that means the Feds will have to higher the interest rate, which will mean there will be immense pressure on the stock markets. That will withdraw the money out of the markets, and that will make the stock markets go down. Yeah, well, the higher the inflation, the higher the interest rate. That means the higher the pressure on the stock market. That means the lower the stock market gets. That means the stock market will correct itself. The stock market won't go this. The markets will tend to go this. And if we do talk about certainties, this is the official government site of the official US website for inflation, and it includes everything: food at home, energy, electricity, apparels, medical, everything that we talk about. And this is from 2004. Do you see there's this certain rise in inflation in 2000 that peaked in 2022, in June of 2022 at 9.1, and from there onwards it's just coming down. There is no sign of inflation coming back up. In the US at least, there is no sign of it coming back up again. But if inflation does not pick up, and inflation decides to be like this, decides to be even lower than this, then what will happen is there will be a insane rally in S&P 500. We're just talking about exclusively US here. There will be an insane rally in the S&P 500, the US markets in general. But I'll tell you a little insight. If inflation does not pick up, the markets will go bonkers. Do you want to see the example of the same situation? The 1990s. See, the 1990s, inflation did not pick back up again. If somehow I could go back and show you the data of before that, there were same exactly like what is happening right now. Inflation did not picked back up, and we see an insane rally in the stock market. What did happen? There was a crash. There was this dot-com bubble. The market lost its value by half. 1980s. I love talking about 1980s. Inflation did not pick up back. The markets were trading very greatly. They were all very forgiving. The markets were yielding great returns. What did happen? The Black Monday. You see this one exact week, Black Monday happened. Ultimately it all imploded when the inflation does not pick back up again, and the markets are just yielding great returns. It tends to implode back up. So now you see the entire, I'm just gonna crucify the entire video and not talk about the further things that I did mention in my notes. I'll just wrap up the video because it's again 40 minutes long. Technically, I see Nifty coming to 24,000 in the next 2 weeks. I really think Nifty should come back to 24,000 before making any further move. I have no idea what the further move will be. If somehow FIIs start buying again, the markets are going to go up. But if they do not, if they continue what's happening right now, which they likely will do, what will happen is there is a very good chance of the markets going down even further to 22,000 levels at least. Why do I say so? Because the wider range of economics does not, the wider macroeconomic level, if we look at the macroeconomic level, the markets do not foster a downside for Indian markets. Do you get it? I talked about gold, right? I did talk about gold. gold is doing exactly what it did in 1970s, what it did in 2008, before any recession. Yield curves are inverting, as I talked about. The yield curve is inverting, one of the best indicator of financial recessions. But inflation in itself is not up. But what if it somehow pick back up, which it is not seeing. Like, there is no sign of inflation picking back up again. If it somehow does, uh I wanted to talk about US dollar, which I won't because the video is too damn big, too damn long. The markets are going to go down to 24,000 at least. I think the next time around I'll be making a very short. The next time around I'll be making a very short script, so that I could cover all of what I have on my notes. As of now, I only covered like 2.5 pages of my notes. That was originally 6 pages long. But again, I'll keep posting on insightful updates, and do let me know if I should continue this or not, because I think I need to improve this a lot. I haven't spoken in the mic for the very long time, so let's see where the market leads, and I'll keep you guys updated. Thank you for watching. This was Shashwat. Thank you.